You don't need to read more news. You need to read the right news. Opening, calm, thoughtful tone. Every day, investors are surrounded by information, breaking news, market updates, interest rate forecasts, stock opinions, economic predictions. Yet, despite having access to more information than ever before, many investors are making worse decisions. The problem is not a lack of information, the problem is too much information. One of the biggest myths in investing is that successful investors spend all day watching financial news. They don't. Experienced investors usually consume less noise and focus more on what actually matters. Markets move every day. Interest rates change. Wars happen. Companies report earnings. New technologies create opportunities. Should investors stay informed? Absolutely. But being informed is different from being overwhelmed. Successful investors don't consume more information. They consume better information. Information overload can hurt. Investors. Every morning, millions of investors open news apps, scroll through social media, and listen to market commentators. Within hours, they have consumed hundreds of opinions, but how much of it improves their decisions? Usually, very little. Most financial news answers one question: why did the market move today? Long-term investors should ask, what trends will shape the next 5 years? Daily movements create emotion. Long-term trends create wealth. Create an information diet. Think of information like food. Not everything available is good for you. The same applies to investing. Some information is essential, most is noise. A disciplined investor focuses on a few important areas. 1. Understand the macro environment. Once or twice a week, understand the bigger picture. Where are interest rates heading? What is happening with inflation? Is the economy expanding or slowing? What are central banks communicating? That is enough. The economy does not fundamentally change every few hours. You do not need a new opinion every morning. 2. Follow sector leadership. Instead of asking, is the market going up or down? Ask, where is money flowing? Which sectors are leading? Is technology strengthening? Are financial stocks improving? Is energy attracting investors? Markets always leave clues. Following sector leadership is often more valuable than listening to predictions. Trapersor 3. Track earnings trends. You do not need to read every earnings report. Focus on the bigger picture. Are companies becoming more optimistic? Are industries raising guidance? Are businesses warning about weaker demand? If semiconductor companies are increasing expectations, that matters. If banks are seeing stronger activity, that matters. If retailers warn about weaker consumers, that matters. The trend matters more than one quarterly result. Naktaria. 4. Study long-term themes. Some trends deserve years of attention. Artificial intelligence, cybersecurity, energy transition, defense, digital payments, healthcare innovation. These are not short-term stories. They are multi-year investment opportunities. Great investors spend more time understanding structural changes than reacting to daily headlines. 5. Watch market leadership. One of the most powerful tools investors have is price. Every weekend, look at charts. Ask, which sectors are making new highs? Which ETFs are outperforming? Which industries are showing strength? Price often reveals reality before the news does. A simple 30-minute routine. Many people ask, how do you stay informed without spending hours every day? The answer is simple: around 30 minutes. 10 minutes reviewing important market developments. 10 minutes checking sector performance. 10 minutes reading one high-quality article or research report, then stop. No endless scrolling, no financial television running all day. The goal is not to know everything. The goal is to know what matters. Build a better information dashboard. A simple investment dashboard could include Bloomberg for major market developments, the Wall Street Journal for business news, the Financial Times for global markets, research reports from investment firms, ETF dashboards to track sector leadership, company earnings calls for businesses you own. Notice what is missing: social media, constant breaking news, market debates. These create emotion more often than better decisions. The best investors filter. Better one lesson changes everything. The best investors are not necessarily those who know the most. They are those who filter the best. Instead of asking, "What happened today?" they ask, "Will this matter 5 years from now?" If the answer is no, they move on. That habit alone can improve investing results. Final thoughts. We live in the most information-rich period in history. Thanks for listening.